Hey guys, Frank Curzio here with another live video. Been doing these daily for a while now since coronavirus started. Love to get your feedback, frankcurzioresearch.com. I'm titling this one major risk that's not being factored into stocks, and that's China. As crazy as that sounds, I don't think that's factored in right now. So yesterday we had a big story out on China, not just a rumor, but intelligence that they lied to us, right, about having an outbreak, how the virus originated. You had China close Wuhan, right? And then when they closed Wuhan, they said that they're not going to allow any travel from Wuhan to any place in China, but they allowed travel internationally, which basically caused this massive, massive outbreak. Again, intelligence behind this. Not that that matters. If people feel that way, they're going to believe it. Now, the trade war with China, remember, forget about the coronavirus. The trade war with China that we had back and forth, December 2018, the markets hit a low, the S&P 500, 2,500. We're at 2,800, close to 2,800, 2,775 right now. That's 10% higher than when we had those major problems with China, just China, right? We're not even talking about the whole world, the whole economy shut down right now. You're looking at the consequences are going to be felt. They're going to be punished. We're looking to move our supply chains out right now, providing incentives for our company. Japan's doing the same thing. This is really going to heat up, not now, but as the coronavirus subsides. And look how far that we traded, like 2,500, and we're higher than that now. Again, without the coronavirus risk. It's important to realize when in February, early February, the reason why I thought stocks would come down uh, sharply is because they closed China. China accounts for 40% of the world's growth. Okay, that's the growth engine of the world. That's the reason why we're trading at such a high multiple at the highs in early February, and we removed that. If you look at China, you look at McDonald's, you're looking at Starbucks, you look at Nike, you look at Levi's, almost all those companies, tons of them, their growth model is based on China. We're going to have major, 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 major problems with China that are not being factored in right now, especially if we do have intelligence that they lied to us. Do you think we're not going to raise tariffs on them? Last time we had this fight, we were at 2,500. Again, we're not even talking about the major economy being shut down. You're going to see those consequences. Uh, China's going to be held accountable. And I don't see that risk being priced into the market right now, which is very, very dangerous. I mean, I think the market should be lower just based on the numbers that we're seeing, which is absolutely crazy that we're this high. But throw in China, which is a risk that's going to happen after the markets start opening up, then we'll deal with it. That's going to provide a significant headwind, especially for companies that are modeling for strong growth going forward after a year and a half, after this, again, 2 years, 3 years. Be very, very careful. I thought that was a big deal. Again, China accounts for 40% of the global growth. It's according to IMF in 2019. They were shut down, which is why markets originally crashed. But now getting into another trade war with them, again, I don't think that's factored in. This is just part of the process, guys. More and more risks are going to pop up, like they do in every black swan event. And this one's definitely not being factored into the market. So be very, very careful out there. And I'll put back to you guys soon. Take care.